We can also, regularly on our list, we point journalists to that list all the time as well. So, please do that. And so I worked out a moment ago why I came in on time with my last slot, having started late, and it was because I didn't go through the agenda. So I think maybe that's probably quite a good thing to do for you, really. Let's just, to give you a little bit of an idea of what's going to start today, we've obviously got these morning sessions where you've got James and myself speaking. The next speaker after myself in about quarter of an hour, 20 minutes time will be Sasha Stan from the FCA. We will then have 2 fund manager panels, one focusing on why it matters where we actually invest, because a lot of people don't get that. And then that flows through to a panel which will be on impact, so what good can we do on it and how does that work? And then we'll start talking about the engagement versus stewardship bit, which flows from that, which is the panel after lunch. But, oops, it's far too easy doing it on an iPad, it's very strange. So during lunch, though, we're going to have a DFM session. So we're going to have half a dozen DFMs, effectively doing a bit of a speed dating thing, if you like. So Suresh, one of the fund managers, will be chairing that, because I will try and rest my voice for a few moments and probably hide in a cupboard or something. But what we will do is we'll get each of the DFMs just talking for a few minutes and then taking 1 minute of questions, and you can stay and mingle afterwards. So during the lunch break, you are welcome to stay downstairs if you wish, or you're welcome to come back up here to talk with and listen to some DFM's portfolio planners types, that kind of area. So that is what is going on. And then we've got another panel in the afternoon on net zero. Then we'll have the afternoon keynote, which is going to be about the food system, because what could be more important? Certainly with everything happening in Ukraine, that was very much front of mind. So we're going to be talking about food for a little bit this afternoon, and then the final session will be some IFAs, some fund managers even, talking about some new ideas, just stuff they've come across recently or started working on, which they've gone, wow, this makes sense. These are good stories that if you're an intermediary, you should be talking to your clients about, because there's stuff that's happening now. And I know a lot of financial advisors, intermediaries, quite often need to look across the market and skirt along the top, but behind the scenes, there's a lot going on that's very granular and very interesting a lot of the time. So that's what the final session will focus on. And with that, let's get back to what this slot was actually meant to be about. So I'm going to spend a few minutes then just giving you a quick run through of what we do normally as SRI services. I'm afraid I like people, so I like having to organise an annual thing. Some of you will know me quite well, Jim, know that I quite like doing events. However, day job, we focus on getting information out there about funds. It's designed for intermediaries. It was originally designed for IFAs, but now we talk financial planners, but also DFMs, platforms, others will use the information that we bring together, which helps funds to explain what they do. I've been working in the area well over 25 years now. I've got a horrible feeling it's over 30, but I'm going to cap it at 25. So really, Fund EcoMarket came about when I left Friends Provident, and it was just kind of, how do we pull information? What does this market actually need? Let's get information together on all of these funds. And we've got quite a lot of users now. So over the last 3 years, there's been, I think, something like 46,000 users on the site. We classify funds. That was the first thing we did. And Jeff may know, Jeff Mills here had a call out at the UK SIF session on Monday saying the styles largely came about from Jeff saying, for goodness sake, can you make this easier for us? And it's proven really, really useful. So thank you, Jeff. I've got big thank you to RSMR for their involvement there. So what do we do now? We classify funds. We have lots of sub-data, about 200 filter fields that you can use to select the different things that funds actually do. And because I've worked on that side, I know to word things in a way that actually represents what the funds do, not what the media or a member of the public or someone might want them to say or want them to do, and expect it to be really binary, because these things are never binary. They're all complicated. We're going to hear a lot more about that today. So I also, as a lot of you will know, I work with people like Parmenion Interactive Investor. We've now got our SRI styles on the Fidelity platforms, so on the PI and the advisor areas of the Fidelity system, just to make it a little bit easier when you're on their site. And we've been working with PIMFA for a while, so we're doing a lot of ESG training on PIMFA, so the PIMFA ESG Academy, that I think my title there is something like technical author, but anyway. So that gives you a basic idea. I'm involved with the FCA stuff, doing the DLAG, so I'm a Disclosure and Labels Advisory Group member there, and involved in the BSI work and various other bits and bobs. And it won't surprise you to know the reason I do all this stuff, I believe in it. It matters. It really makes a huge difference where we invest. Because the world is built by investors, for goodness sake, and it's funded, and it's the companies that get capital that can be encouraged to change, to go in the right direction or the wrong direction by investors. So this stuff really, really matters. But to start with, what I'm going to do is just try and set a baseline for some terminology, because I think this is only going to work today if we all know what we're talking about. So if you disagree with me, wave a flag, and we'll get Hannah and George getting a mic to you so that you can make some comments. But so sustainability, essentially stripping it back to basics, it means something can carry on. I mean, at the moment, the way people are leading our lives, we can't carry on like this. It simply can't. We are going to run out of resources. It is, that is... Lost it. There we go. Back on. That's one of the few things here that is properly binary. I mean, it may well be that clearly, some people survive, but we will come under such massive pressure if we do not focus a great deal more on everything we do. Got to focus on sustainability. When funds are talking about ESG, they're talking about risk mitigation. They're talking about enhancing risk mitigation. To me, that's increasingly becoming business as usual, and certainly should be. Impact, we're talking about the real-world outcomes. So pinpointing what it means to the world when you take a particular action as an investor. Stewardship is about responsible ownership. It's about encouraging change. And when we're talking in this context, we're talking change for the good, not just trying to rip more money out of companies. Ethical, we're using that word to mean personal values, right? Things that people care about. So many of those, of course, will be environmental and social. There's a whole load of us here in this room and out there in the big wide world, as messy as it is, that actually really do care about environmental and social stuff. So, don't assume that they're completely separate. But often when we're talking about ethical values, we're talking about the traditional stuff, the bombs, booze, and baccy stuff that really kicked off this area. Screening, we're talking about avoiding and supporting companies. Tilting, we're talking about nudging one way or the other. Do a little bit more in this, a little bit less in that. So it is different from screening. It's the same general idea. It's a bit about reallocating capital, but not in the same way as screening would be, which is normally a lot stronger. Integration, read that as also considers. That doesn't give you an answer as to how much they consider it or to what priority, but that means that it's being considered. And alignment means you're lining up to something, so you may be saying, we're aligning to the Paris goals, we're going to reduce carbon emissions by 7%, or whatever it is. So do those words broadly make sense? Have I said anything horrendously different from anyone's interpretation? No? Okay. I've got lots of shaking heads, but also lots of people not moving. Thumbs up if we're comfortable with this. We all agree. Okay, unanimous, industry decision, something like this. It's, I like plain English, I like short words, so I try and keep it very, very simple. The next really important point to make here is we know where we've got to get to. I've already touched on this. We have got to get to a circular economy. We've got to stop pulling stuff out the ground and burning it or digging it into a hole. It cannot continue. There are lots and lots of us, and if we keep doing that, we'll all be living on a dump. So, that doesn't work. So linear economy, circular, beyond question. Net zero, again, completely not optional. Yes, of course, some people will survive and be able to adapt if the climate crisis runs away with us, but we do not want to be there. We have every opportunity to stop it and to address climate change and to reduce emissions. We can do it. But as a poll was shown, there's Cristina Figueres and one of the fund managers, they mentioned this to me the other day and I looked it up. There's a lot of us in this area now who've lost faith in that. And we can't. We can't lose faith in it. We've got to believe it can be done. Because it's what most of our jobs, a lot of our jobs are about doing that. But frankly, if we don't believe that we can achieve the future that we want, then probably we all ought to be building bunkers or something. And I don't think any of us want to be doing that. So yes, of course we can, but we've got to use our voices, use our capital, use our positions every time to push people towards focusing a lot more on sustainability in every single thing they do. And yes, the world is imperfect. I've got examples here. So you'll notice these lovely bags, which were a bit of a last-minute purchase, but made from plastic bottles. Imperfect. George showed them to him last night. yes, but how do you recycle that plastic? Mum was like, I don't know how you recycle this plastic. So, you know, it's got to be better reusing bottles. However, we've still got questions over pretty much everything. Hopefully the bags can be recycled. But anyway, they have come from plastic bottles, so please do take them. I don't want to be taking 250 bags home with me. And then you order, again, made from plastic bottles, lanyards. You go on a website, specialise in it, they're super green, all the rest of it, and it comes wrapped in regular plastic. I mean, for goodness sake, you want to write back to them and say, did you not get the memo? I've just given you a load of money here to give me stuff which is completely recycled and told you all about my green credentials, and it turns up in wretched non-recyclable packaging. So, you know, that is the world we live in. I think we've got to be realistic about that, and we've got to recognise that we are making steps in the right direction, but then try and make a point of asking those questions when you're talking to people, whatever it is you're doing. Just get people to focus on that. And sorry, I skipped past the just transition one there. The other bit of this, of course, and you'll have picked up on my views on this with my comments about Ukraine earlier, we've got to take people with us. It's got to be a just transition. You know, we cannot leave people behind. You know, for one thing, it's stupid to, and it's wrong to. But if you want to be really hard-nosed and capitalist about it, it's a really bad decision as well, because we'll end up with loads of wars and stuff. So we don't want that. There's no benefit to leaving people behind. So the transition as it comes has got to be just. That means taking people with us, from the very wealthy to the very poor, and raising standards for everybody. This next slide that I'm going to go through very briefly is one that I use quite regularly just to try and help people frame this whole area. Because one of the things that people do not get, and I did a PIM for Compliance conference the other day, and it was remarkable how many people clearly didn't get it. This market is really diverse, and there are lots of different strategies, and different funds suit different people. And guess what, guys? That's okay. We're all trying to pull in the same direction, but we all do different things. Clients think differently, fund managers think differently. It's good news. All you've got to do as an intermediary is understand it. So I do this kind of 4-3-2-1 thing, which obviously I can't do the fingers, but if we just understand that there are 4 main areas or issues or topics that we look at: environmental, social, governance, and ethical. So when you explain this to clients, you can use this kind of model to explain what it is. 4 main areas these funds consider. There are 3 different ways, 3 different approaches that funds can take. You can avoid stuff, you can support stuff, so stay away or invest in, or you can engage and try and encourage change. And they're all legitimate strategies. And then there are 2 real-world outcomes we've got to get to, 2 things that you know, the future demands that we pay attention to. One is that we finance and push money into those companies that are solving problems, the solutions companies that are enabling change to happen. But that doesn't work on its own, because we can have as many wind turbines as we like. If we're still pulling coal out of the ground, we are none the better for it. So we have got to drive change in existing companies too. We've got to take them with us and find ways to enable them to transition. And then there's one very conventional thing here that so often people forget in this area, especially if you're kind of from the outside of it. This isn't about charity. Charity is completely separate. This is about making money. Because people will only finance things and put money into investments if they think they can make money. It's what it's for. Otherwise, they may as well leave it in the bank or under the bed or whatever. Not that anyone has cash anymore, but you know what I mean. So that's kind of a framework that I've spent quite a while knocking together to try and make some sense of this area and help people explain it simply. So to labour that second from last point a little, and I try and describe this verbally sometimes, and it so doesn't work verbally, but we've got this massive mountain to climb here, right? So on the left-hand side, you've got the guy climbing his mountain, and you've got companies on the left that say your oil companies, your mining companies, etc., and they are dirty and brown, and they've got to shift. So we've got to drive the economy over to the right. And you've got the companies on the right, which are your clean green companies, your change agents, your solutions companies, companies that are doing great stuff. But the important thing is that most companies sit in the middle of these 2 somewhere. So the vast majority is kind of companies are in the bulk in the center. And a lot of funds in this market are too, and that's why we combine screening or tilts or different strategies alongside engagement, because most companies are imperfect. Now, most of the funds that we will be talking about today and the companies that they hold will be way over to the right, yeah? But we've got to not forget the ones over to the left, and we have got to encourage change in them. And doing that successfully in a way that means we don't talk about greenwash probably means for most of them you do not give them the label sustainable, because they are not sustainable companies. They've got to change. But for those where there's still arguments around being able to change them and they're not all bad, well, we make absolutely certain that people know that there is engagement happening that will change, and that's about disclosure, it's about getting the correct labels. And that's, again, comes back to what the SDR is all about. So understand that most companies are kind of in the middle somewhere. There'll be some good stuff, they do some bad stuff. On the right, we're labeling sustainable. On the left, we're not. But be pragmatic about the fact that stewardship and actual stock selection or investment directly into projects both matter. I'm not going to go through these slides in detail at all, but just to say, we need to recognize always that client motivations in this area vary. I talk about three main opinion sets. One is saying this just makes good business sense. Another is that we want to have positive impacts and change the world. And another is that they want to focus on issues that just personally matter to them. Call it ethical, call it what you like. And those clients have different motivations, and they map differently across different types of funds. So when you're looking at the suitability perspective, then if you've got different issues that a client's interested in, dependent on what a fund does, whether we've classified them as being maybe a sustainability-themed or focused fund, or if we're talking about them as being a sustainability-tilted fund, or an environmental-focused fund, or a social-focused fund, they're going to be doing different things. That is why advice matters. That is why reading up on what the funds do matters. This stuff is important because you can't give the right advice otherwise. So what's happened in the market over the last few years? Well, what we've seen is a massive growth of those funds that are on the right-hand side. So we call them sustainability tilt, limited exclusions, so just excluding one or two areas, or ESG plus, so risk mitigation focus, probably with some screens. That area has boomed recently. It happens to have coincided with a lot of talk about greenwash. So whereas once we had differences in opinion, now we have fierce battles over greenwash, which doesn't help anybody, which is why it's really important just to make sure people know what it is they're buying, because there's no simple answer. We've got to transition those companies. They may or may not, in due course, still be able to call themselves sustainable funds. That will largely depend what the regulator does. But it's important that a client knows. I'm not going to go through this in detail, but we've then got an advice process that I talk about, and just be aware of the stuff that we do. So basically, you find out which of your clients are interested in this area. Then you find out generally what they're interested in. That's our SRI Style Finder fact find questionnaire on our site. And then you go into the more granular searches to help refine down to what you want to find as an individual fund. I'm not going to go through this in detail. It's not what today's about, but I just want to flag it because we've got all this stuff on our website, and I will be running sessions, or I do run sessions explaining that stuff sometimes. So on to Fund EcoMarket. One of the other things I should have said right at the start, thank you, obviously, is to thank all our fund partners. I couldn't do it without the finances. I'd have to go and get a regular job. So fund partners, phenomenally important. Thank you very much. Absolutely brilliant for enabling us to do this and to be out and about talking to people about this stuff as well. We've got the app, which is Fund EcoMarket app, which is the people that use it seem to love it, find it really useful because you can download it in about 3 seconds and search for funds for a specific criteria in a matter of seconds as well, so it can really help. And then on the right-hand side there, I just thought I'd show you the most recent searches that people have been doing on the site. So what do people search for in terms of looking for funds on our site? A lot of people have obviously assumed that it's kind of the real detail that people go for. A lot of the time they don't. Most people will click a fund type, so say an OIC, and then they're just looking generally, they're using the styles all the time. And obviously I've had this conversation with the FCA over the years, who incidentally I've been working with them on this kind of stuff for about 4 years, talking them through how this kind of thing works. But the styles are always really, really popular. And then you get into some conventional financial stuff and geographic regions and that kind of thing. And it's not until you get down to things like number 17, where it's a more granular one, specifically excludes coal, oil and gas majors. And that has come out top for years, which is why I bang on about it constantly, because that is what retail clients really seem to care about, and it's what advisors are searching for. Can you find me a fund that avoids coal, oil and gas majors? That is, always comes up in the top batch. And then we've got arms, which these numbers are from this year, so I thought armaments may have dropped. It actually hasn't. And then tobacco is another one that obviously people expect from this area, but it's still important to so many people. And then my last slide is to show you some new news, if you like. One or two of you have been with me on this journey, feeling this pain for the last year or so. Our new website actually went live yesterday. It went live approximately 6 o'clock. So clearly it wasn't stressful enough trying to organise a conference. You've got a new site to go live. I've dropped a load of stuff down to make it invisible because it's not quite there yet, because I didn't think it was going to go live, and they said, we're ready. I said, right, get it up there. So sriservices.co.uk is where, in future, we're going to drag all the stuff that's on Fund EcoMarket onto SRI Services, and we're going to reorder all the filter names. So that table there, the orange table, basically what we'll have is a section on funds and a section on fund management houses. And on the fund side, you'll be able to go into the area for sustainability, environment, social and ethical, governance and banking, and methods and intentions. That stuff gets missed all the time, but it's really important. How does the fund actually do this? Is it about tilting? Is it about screening? So I'm hoping that by restructuring the database, we'll get people to spread out the stuff that they're looking for. And then we've designed fact finds that sit alongside this. We need to get the new setup on the database, but that's not there yet. But it will give you a process to talk through with people, talk through with clients, or if you're a fund manager, to show to IFAs. So these are the kinds of things that you can search for, and it will give them a lot cleaner process. So the new site is now live. One of the new bits that will be on the database when the next version, it's sitting in the background, but it's not ready yet. But we've got our dial shifter statements from there. Some of you, can I have a show of hands? How many of you were here in 2019? Sorry, not here, the Barbican. Were many of you around? Cool, that's fantastic. Thank you for coming on this journey. So I promised then I was doing Fund EcoMarket stuff, doing dial shifter. It got delayed in part because we've been doing this amazing project with Fidelity, which has been brilliant. I mean, it's slow, it's hard, because it turns out they've got lots of IT and they're a bit bigger than SRI Services. So we deprioritised dial shifter a little bit, but it is still going to be coming. We'll be doing events. We will be using the criteria that's on the dial shifter site now that will go across onto SRI Services as well to say what we expect from a fund if you want to use the dial shifter badge, or from an IFA, or from an intermediary like a platform, as well as being a financial advisor. So there will be criteria that you have to do, but we will get people focusing on what are you doing to shift the dial. Short, snappy, punchy sentences. Tell us what you do. We want to hear what's making a difference. Whether you agree with fund managers on that or not will depend from person to person. But if we can get fund managers to articulate that, we will be, in my view, in a better place.